Andrea Teixeira joins us now from J.P. Morgan. She downgraded the stock today. Thank you for joining us. I did some investigating, Andrea, about whether the company held a call with investors and analysts last week or something, why you guys all downgraded the stock. It doesn't sound like they did they? Why did this all happen? 4 downgrades in a row.
No, I think what has happened, thank you for having us and having me specific on this name. The decision was basically on the back of their announcement yesterday that they were hiring a judge, Judge Michael Luttig. I think that raised more questions about what has happened. And that was back November 18 when they had an opinion, the IRS had an opinion regarding, and the tax court has had an opinion regarding this matter that goes back to 2007 to 2009, and that's about $3.3 billion that they were deemed as an opinion. It can be appealed, and I believe that Coke will appeal to that, but that becomes an overhang for the stock, and that's what I think investors should be worried about, not so much in retroactive terms, but also what the future can bring, if that would mean that eventually they would have to raise and close these potential tax loopholes.
What about the sentiment around staples as well? It feels like investors right now really want reopening trades. They want to be tied to the vaccine plays and value trades. That's what's popular. Where does that leave consumer staples and overall sentiment toward the group?
Yeah, definitely, Sarah. I think that relative to the higher growth names, definitely staples, and that's a house view that J.P. Morgan has, that staples should relatively underperform in the reopening trade. Specifically on Coke, there's still a reopening trade there, but I think that in general, staples should underperform in a scenario of recovery.
Steph, are you still a holder of Coke?
I am a holder of Coke, and I do think this tax issue will be an overhang in the short term, but I'm still focusing on fundamentals. I mean, Sarah hit it. It's down 9% in 4 days. It's now yielding 3.3%. And it is a reopened stock. 40% of their revenues are derived from on-premise, and 10% are gas and convenience stores. So as we reopen, they should actually do better. They've been doing the CEO is great. They've been doing a great job in terms of streamlining their products, for sure. And they're gaining market share. They have pricing power, and they are doing an amazing job on operating margins and cost controls. Operating margins last quarter were up 230 basis points. That is very, very impressive. So I think they can get back to that 8% organic growth rate. And I love the setup into earnings because expectations are super low here.
Andrea, it was always considered Coke was the away-from-home play and Pepsi was the at-home play, which is why it was outperforming during the pandemic, because it had the snacks and people were buying snacks at home. Is that still the case? Because I noticed Pepsi's gotten a few downgrades of its own this week.
Yeah, no, I think what Stephanie had said, it's right on, and that's the reason why we still like it long-term and fundamentally. Coke and Pepsi, I think Coke obviously has a bigger portion, as Stephanie correctly pointed out, is about 50% in total exposure to on-premises. The difference between Pepsi and Coke is that I don't think that Pepsi will have that overhang in the tax front, and it's less, Pepsi has less exposure to on-premises, it's about 17-ish, 15-ish%. So there will be less of a benefit there, but by the same token, it's a pretty defensive name, and it's also like an accretive name on earnings. So I think that Pepsi relatively is a better stock here into the print. We have an overweight rating on Pepsi.
Shepard Smith here. Thanks for watching CNBC on YouTube.